Now, the global business playbook is shifting. Tech disruptions, geopolitics, and the risk of US-China decoupling are reshuffling winners and losers across industries. In its latest Future Readiness Indicator report, Swiss business school IMD says the companies most likely hold up are those that control every layer of the AI ecosystem, not just those that spend the most. IMD ranks Nvidia, Microsoft, and Alphabet among the most future-proof companies for their edge across the AI supply chain, and that covers everything from chips to cloud infrastructure to the user interface. IMD's report also highlights a major shift in pharmaceuticals. Johnson and Johnson, Roche, and AstraZeneca top the chart, given their broad diversification, heavy R&D, and early AI adoption. And in fashion, the report shows a polarized picture. At one end, ultra-luxury names such as LVMH and Hermes continue to be the top-ranking fashion brands. And at the other, fast fashion powerhouse Inditex, parent of Zara and Bershka, continue to gain share. And for more insight into this report, we have Howard Yu, Professor of Management and Innovation at IMD Business School. He's also Research Director at IMD's Center for Future Readiness. Howard, good to see you today. Now, I'd like your take, first of all,
great to be here,
on which companies built to withstand things like geopolitical shocks and tech disruptions. Explain to me what it takes to be future ready in today's context and the common thread across the vastly different sectors.
And in 2025 and going into 2026, we saw companies that are future ready are the one who systematically de-risk market risk. Like you said, geopolitics is so noisy. And so whether it is in the fashion industry, as you see from LVMH to Hermes to Zara, or whether it's big tech giant from Nvidia to Microsoft, they are the one who have been able to embrace systematic, purposeful expansion, whether it's geographical area or product line. And as a result, what we see in the AI company, for instance, the tech giant, they are the one who really control the entire tech stack. They're not just providing one product, but they are providing user interface, software integration, in a sense that to lock in the whole ecosystem. And this is how the risk is a must. And this is how company can continue to grow the next growth engine going forward.
Howard, your latest report looks into three categories, but let's focus on tech that gets everyone talking. So big AI names like Nvidia obviously have raised concerns about lofty valuations and dot-com era bubble risks. How valid are these concerns?
Look, so far what we have seen in the market is continue to raise the demand for infrastructure building. I think the pressure for company right now is turning some of this infrastructure to demonstrate productivity for end user enterprises. So it's not just enough to build up data center as we saw, but it's also companies, whether it's pharmaceutical organizations or heavy industrial-based company, can leverage those data center to turn into the next wave of revenue for them in order to sustain that build-up cycle. So I think what is really fascinating is you beginning to see what is Nvidia or Microsoft. They're providing almost enterprise solution end-to-end in order to boost productivity for their customers. I think this is why organizations that control the entire tech stack essentially will control the destiny for the industry.
Interesting. We're seeing wild swings in equity markets lately. At record highs, AI stocks get easily sold off or being punished when their results fail to exceed expectations. How is being future ready helping companies maintain their A game?
Yeah, I mean, this A game is so important, right? Because what we have seen is big, lofty vision is no longer enough. And that demonstrates in the plunge or the decline of Intel, as opposed to the steady climb of Samsung. One company in Samsung, you see they continue to improve their memory chips, and in a way they get the qualification from Nvidia, able to ship their product. As a result, they are able to capitalize the growth opportunity. versus Intel sort of getting trapped in a situation where their product cannot get qualified yet. And so this is where we see the divergence. It's organizations that actually lead by almost like a quiet leadership, ship product quietly, get things done with discipline, not just the near term, but also steadily build up that capability for the long run, are the one who win out the most. And that is the leadership lesson learned that we have seen across all industry to become future ready.
All right. I think we've heard enough, but thank you so much for your perspective. We'll look forward to speaking with you again, Howard. Howard Yu there, Professor of Management and Innovation at IMD Business School. He's also Research Director at IMD's Center for Future Readiness.